Hey everybody, Dan here, Dan Fitzpatrick, stockmarketmentor.com, and I want to look at a few different stocks today. First of all, Home Depot. Now, this ain't exactly the sexiest name in the world. Probably clicked on this link and went, Home Depot? I don't give a crap about that. And fine. But I'm covering it anyway because it's my video. So here's the deal. This, when the market's really, really volatile, as it's been, we look at the S&P, pretty nasty. We look at the Qs, pretty nasty. Then we go back to Home Depot. Pretty good. Looks pretty good to me. You're not getting rich on this. Now, we just added this. I just opened this up as an active trade not too very long ago, when the stock came off of this 50-day moving average, boom, right there. I said, hey, let's go ahead and buy the stock, and we'll put an initial stop right down there, super, super tight stop, and then a lower one right here. And the idea is this. You want to be buying at a point where you reasonably expect to make, if you're right, you reasonably expect to make money right away, even, that day. Or certainly the next day, 2 days later is okay. But if it's even later than that, you may hold on to the stock, but you got to just assume whatever that you didn't buy it right, and that has to be okay. So what I like to do is I like to wait and wait and wait until I have a pretty high probability setup. And it's the type of setup where if I'm wrong, I know it right away and it doesn't cost me much money because trading is actually speculating. It's not money printing or money harvesting. You're taking your shot based on an educated assessment, which is based on your experience. The more experience you've had trading, we'll just say the better you're going to do. And so then as the stock moves higher here, again, the market's pretty crappy. And so we're moving up here and up and up and up. And now the stock is back up there. So I think this could actually be a secondary buy, or not a secondary buy for us. We're in at a lower price, but we're not really up that much. But if the stock trades back down to the 50-day moving average, this is a stock that you could buy. Just don't expect to get super rich on it right away, but you're kind of parking your money in something that's safe, that's not going to implode. Now, one other thing real quick. Another stock I was looking at today was NFLX, and it was really kind of in this context. I haven't been interested in this stock in quite a while, but it had that breakout, rallied up above 580, and then broke through 600. Okay, then it pulled back. And so then today I was looking at the stock, early in the day, and I saw how the stock started trading, and so I put this on our active trade list, and it was just a couple bucks from where it is right now. So I like the way NFLX is trading, but as always, you got to define your stop. You have to be able to say, okay, where would the stock go to prove me that I'm wrong? And I would say that the stock goes down below this price here, this 568, which is this intraday low. So if you're buying it here, you've got about a 6.5% risk on this, and that's about it. Okay, so anyway, here's two stocks for you, Home Depot and NFLX. Hope this works for you. I hope you're not over trading in this market because it is kind of choppy. It's going to take a while for it to get its footing or for the bears to come in and really take this sucker down. So just remember that the more money you have at the start of the next move higher, the more you're going to be able to make because you've got that put to work. So if you're losing a lot of money in a certain market environment, then you're going to have less to work with when the market environment turns more favorable to you. So anyway, that's all I got for you today. Have a great day.